Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, and I'm recording this Wednesday morning ahead of the Thanksgiving holiday. I know it's been a bear market year, but I'm sure we all have a lot to be thankful for, so I hope you and yours have a great long weekend. Our offices will be closed on Friday. We'll be back at it again on Monday. Although if you are a Cabot Top 10 Trader subscriber, just as a reminder, there will be no regular issue on Monday, but we will be sending a full movers and shakers update. It's one of our two sort of partial weeks off a year for that advisory, 50 issues a year. As for the market, listen, not a lot has changed since the video on Friday. The intermediate term trend is still up, but not much else is, meaning growth stocks are underperforming, defensive stocks are outperforming, long-term trend is down. The broad market has improved, but it's not quite healthy yet by our measures. So, we're kind of in the same stance. We're still highly defensive when it comes to, growth stocks anyway. I will say from a 10,000 foot point of view, I like the way the market has handled itself recently, kind of a tight, grudging decline or consolidation here after sort of the inflation good news and the rally here a couple weeks ago. And I'm seeing that reflected in a bunch of charts too, both growth stocks and elsewhere, where things just seem to be a little bit more under control. It's early stages, but we'll see how it goes. And I just think it could be part of really sort of a 2-month process at this point, really since late September, the broad market bottom. We've gone over this before, where the market could just be repairing the damage here, okay? So I still need to see stocks go up. We're still seeing a lot of selling on strength, but we're seeing some stocks sell on strength, but not really pull back much. You're getting a little bit of the vibe that the sellers might be running out of some ammo, at least, in the near term. So from my point of view, I know I say this a lot. I do think, when you're cranking through some leftovers this weekend or, after the Ohio State-Michigan game, get your shopping list ready. I do think if the market has a good couple of days, next week or two, individual stocks start to pop, we get some volume to come in, I think there will be some stuff to really work with. I'm not saying it would be 1999 or anything, but I would probably be putting a couple more lines in the water. As usual, though, we have to see it to believe it. Most of the evidence is still pointing in the wrong direction, but I am sort of seeing more and more signs that, again, the damage is being repaired. Some stocks are handling themselves well. And if the buyers can really show up, like I said, we have something to work with, okay? Let's hop into the charts. I'll show you what I'm talking about. As usual, I'm using MarketSmith. It's a program from Investors Business Daily. You should check it out. You can learn more at marketsmith.com. So here's the NASDAQ. And all I meant here was, we talked about this sort of, I don't want to say it's a bottoming process, but really since late September, for the most part, the market has been healing itself, it seems like. And this latest few days, listen, it's a holiday week. I'm not trying to get into the weeds too much, but it has been kind of tight and proper. And I don't have it on this chart, but if you look at like the average, it's called the average true range, basically how much the market is moving every day. It's really sinking like a stone here, which is usually, this is a tertiary thing, but that's usually more, you see that in good markets. The bad markets are the ones where you see volatility going nuts. Even back here in this rally, the daily range, I don't have the indicator pulled up, but it was quite high. And of course, when the market starts skidding, you get it even higher because there's emotions get involved and you get the big declines. But things have been pretty tight and controlled so far. So we'll see how it goes, okay? It's a start. It's another kind of baby step in the right direction. Now you want to see, things kind of push higher and hold and push higher and hold, so on and so forth, okay? Now, with that said, we'll run through the indexes here. S&P 500, same sort of thing. Nice little consolidation in here. Small caps, toying with the 200-day line in this area. Starting to underperform a little bit. This is very, very near term. But overall, stronger than the other indexes and near the 200-day line, mid-cap, same sort of picture, still holding above the 200-day line, actually. So, I view this action as positive. You kind of have this thrust, and it's holding it so far. Can we come in next week and things fall apart? Sure, but so far, so good. Now, with that said, as I get my notes out, the long-term trend is down. Growth indexes are, they're still underperforming. This is the IWO, looks okay. Kind of looks like the IWM, but it's a little bit weaker. But if you look at like the IPO fund, I pull these up all the time, it's still buried, ARC and stuff like that. They're still somewhat struggling. So it's kind of a mixed bag on the growth stocks. And it's not hard to see that, this is the XLP. I mean, this is not what you want to see. It doesn't mean, it's not bearish per se, but it just tells you, it's descriptive. It's telling you that, yeah, people are buying stocks. They're underinvested. What are they buying? Safe stuff. XLU. This is utilities, not as strong, but you can see, really pushing to higher highs here ahead of the indexes. Even like REITs, IYR, yield sensitive stuff has been acting better than, others, than, growth stuff and even the broad market. And then, just look at the Dow. I mean, the Dow, this is the DIA. but the Dow is way above its 200-day line. It's near its August highs. I mentioned this last week. That's just not, it's not bad. It's just not ideal. And not just because I'm a growth investor, but just usually it's a sign that people are being cautious. Now that can change. We have seen, I remember after the 2016 election, not to go down memory lane, but things went nuts and it was like financials and industrials. And we're seeing that now with XLI. Okay. XLI actually out to multi-month highs by a hair this morning. We saw that for a while, and then come January 1st, all of a sudden, Shopify broke out and stuff like that, and we were off to the races with a great growth year. I'm not drawing a one-to-one comparison. I'm just saying it's not negative, but you just want to see it change before really taking a lot of action. And then just generally speaking, like here's Burlington Stores. You can see the sales and earnings down here. This is quarter by quarter. They do have good projections next year, to be fair. But you're getting big gaps and stuff like this. Ross Stores, kind of defensive stuff. Just no growth there. Just kind of like reasonably valued, beat estimates. That's where the strength is coming from now. But you're probably, I hope I'm wrong and Ross Stores goes to $200, but you're probably not going to be led by Ross Stores and the new bull market sort of thing. So we'll see how it goes. Okay. Now, on the positive side of things, I have a ton of charts to go through. So if you're, like I said, doing some extra research this weekend, I'm not trying to dump on the industrials. Top 10 this week was actually huge in a lot of construction names. So this is MCore, EME. It's not a sexy name, but steady. Every year you can see earnings up every single year here. Great recent quarters in terms of double-digit growth. And just had this long consolidation. And then just notice this. It's up 8 weeks in a row before this week. And the last 4 on huge volume. And this was sort of before and after earnings. Look at the daily chart. Here was the earnings report back here on the 27th of October. So call it Halloween. And it's really just stretched higher. Not saying I would chase it, but you get some sort of yonk here or consolidation of the 25-day line. That looks good. Fluor is more of an engineering construction firm. But again, it's kind of been in this sort of a stair step, consolidation, breaks out, but then the market pulls it back in. And now you're starting to get you can see some buying down here on the weekly chart. And again, I am seeing more of this. So the stock gaps, you have 2 good days of volume in here. This is on earnings, boom, boom. And then it's just straight sideways. Now, sometimes they straight sideways and they pull back. So it's not a predictive thing, but that is more proper action that you see in a bullish environment, really. So we'll see how it goes. Vulcan Materials, VMC, this is construction aggregates. Just again, you're kind of hitting higher, a higher low here and a higher high. That's kind of the definition of an uptrend, depending how you want to say it, above the 200-day line. That looks pretty good. So I am seeing it's not so much, we are seeing housing. I've mentioned DR Horton just to pull this one up again. Looks pretty good. Again, kind of tight in here the last week and a half. So construction, especially sort of non-residential stuff that has long lead times. It's not just like building a house. Not that a house happens overnight either, but some of these big projects, even like data centers, things like that, we're seeing some strength in there, okay? On the growth side of things, one thing I am seeing here, so again on the tightness phase, so like here's Dexcom, this is DXCM. I've mentioned it before. It got hit here, showed some relative strength into the summer. And then had a big October on a couple of big pieces of news, including earnings. So right here, it has pulled back, but it's right to the 25-day line. There's been a little selling, but nothing huge. And you're just seeing this more proper thing. The stock went from 80 to 120. Now here we are at 110, right? And if, maybe we come in next week and the stock's down, 10 points on Monday because whatever. But if the stock can start having a couple of good days, all of a sudden you're looking at this saying, hey, this, even on the weekly chart, it's probably easier to see. You have this big run here, especially in the last month, and now you have this, 4-week flag. I'm not a big, whatever you want to call it, but 4-week kind of shelf consolidation in there. Volume's drying up. It looks pretty proper. Pod, Insulet, which is kind of the same industry. Mentioned this before. Here's your higher low, catapults on earnings, big volume. And now you got this 3 weeks of, tight action. Yes, this week, it's a holiday week. We're only on Wednesday, so we'll see how it goes. But you could be setting up sort of a 3 weeks tight action in here. So, both of these are on my watch list. I would rather, it's tricky. You don't want to wait. You don't want to wait for like the breakouts because you're still seeing that sort of selling on strength. But you don't want to, pick a knife, catch a falling knife either. So I'd rather see some, a good day with good volume, the stock holds in there, something like that tells you, hey, some people are gobbling up shares down here. So far, so good. Halozyme is another one in the medical field, HALO. Here was your big breakout, 2 big days of volume, and just kind of a nice tight consolidation up here. And really, this is part of I forget, I think it's a 21-month, whatever it is. It's a pretty damn long consolidation in here, and a nice, nice hold. You'd like to see it higher. Obviously up is good, and up is where we make our money. So you want to see higher. But so far, this is acting, pretty properly or whatever. Another thing I'm seeing, this is more on the encouraging side. Trust me, I could show you, stocks that are blowing up, but because there's still some air pockets out there. But so here's Arista Networks, ANET. Again, bigger picture, weekly chart, big consolidation. Really looked like it was having a coming out party here last October, November. But then, of course, it was a bear market. But net hasn't done anything during the past year, which is, again, really good. And reacted well to earnings here recently. What I'm seeing here, and the reason I'm pulling this up is, it looks good, numbers are good and all that. But you can see it's kind of, so here's sort of obvious resistance, and it gaps up and then it pulls back. But then instead of, let me give you an example. Like here's Shift 4. I love this story, but the stock is just, tries to break out, and then look what happens. It goes from 54 to 42 within a few days. Now here it is back at 46. That's kind of the wild action we've seen of late. I'm starting to see more of Arista where it's kind of like, okay, it tests new highs. Nope, fails, pulls back. But now all of a sudden, a couple days later, nope, now it's back to testing new highs. You can kind of see, I don't want to get too close to the market, but you can kind of see they're almost trying to sell it. Like the people they're playing the obvious game. Now it pulls back again. Look, it's going to fail at resistance, but no, it kind of pushes higher again, even on low volume. And then it tries to reverse, but really can't do anything. So it seems like they're trying to play that game and sell at resistance, but there's not as many sellers up there. And the more times you bang on resistance, the better, okay? End phase, we're seeing this, okay? Here's a test of, call it 315 to 320. Here's another test. Here's another test. This morning was a test. And it's been failing, but we're not seeing yet. Maybe next week it happens, but we're not seeing the whoosh. Maybe it happens next week. I don't know. But, so far it kind of pulls back a few percent, holds, and then kind of assaults again. So we'll see how it goes. Academy Sports, ASO, kind of another example. Tested a few days ago, got hit on the target news, and then right back. This is being helped by Dick's Sporting Goods, had a good report yesterday, I think it was on Tuesday, or reacted on Tuesday. So this is actually kind of testing its old highs here, but, kind of shrugging off some stuff. Inspire, INSP, this is lower level, meaning this is, it's in the medical device field. It's lower level, kind of looks like Insulet a little bit, higher low, nice reaction to earnings. But again, you kind of have this obvious resistance here, which has been, death for growth stocks. And it kind of got sold here after earnings, but then snapped back, and then it got sold here, but then held tight, and now it's kind of assaulting it again. And then maybe, I don't want to, this is too early, but this is Celsius, the 100, round numbers, 100 level, test it here. Yesterday during the morning, I was like, here we go, another failure. But the stock kind of closed well. And then this morning, obviously it's a low volume pre-holiday day, but now it's right back to $98 as I record this, kind of right back to that 100 or 102 level or whatever it is that it kind of failed at. So we're seeing a little bit less where they're not going up, which is what we want to see, but they're also not cratering, or at least more of them aren't cratering. So they're kind of pulling back and bouncing back. So if capital I, capital F, we can get some real follow through, that would be something good to see. On the energy front, I am noticing, so natural gas, this is the UNG, which is kind of imperfect, but just take my word, natural gas was probably like $9.50 up here, and then it fell to maybe $5 or something, $5.50, but now it's back to like $7 or something like that, $7.50. And interestingly, so some of the stocks, the natural gas stocks did pull back, but some of them look fine. This is EQT, and when you look at it, it really, it had a huge run in here. I'm not sure why the volume's not, there you go. And then it kind of broke, and this whole thing kind of maybe is one big base. Maybe it's late stage and it fails, but it's been holding. You can kind of see it's been testing the 200-day line, 40-week line in here a couple of times, held this sort of support area. Now it's starting to perk up a little bit. Chesapeake Energy, CHK, is still my favorite in here. There's, again, how many times can you test 105 and just, boom, boom, boom. It's very obvious that level. Now, maybe it just holds and the stock fails, but, it is something where if it can get ahead of steam really through that and you get higher natural gas prices or some good news in the industry, that is a name that I'm still watching. Chip stocks are interesting, back on the growth side of things. So here we go, testing the 200-day line. This is the SMH. They really were the worst thing out there, and this was the inflation report that was bad, but the market actually found support on it. This was in October. And you can see it's kind of had this short-term accelerating uptrend, and again, holding its gains. And we are seeing some more names that are perking up. I mentioned Pi. I think I mentioned Pi last week. Really nice chart, a little bit thinner, good numbers. And you can see it's actually testing new high ground. Will it hold? I don't know. But again, you're kind of seeing this where it's rejected, but it keeps trying to do that. And the longer the market holds up, that's what I mean. The more attempts at these, the better the chance that the resistance will fail. On semi, this is more whippy. You can see 77 to 68 in a couple of days. But net on the weekly chart, I've mentioned this a bunch, it's still holding up well. You'd like to see it tighten up, but certainly looks proper. And then Global Foundries, which we followed kind of off and on all year. It's almost like a new Taiwan Semiconductor with longer term contracts. Basically it's just, again, when you look at the daily chart, it looks good. So it's basically formed this sort of more proper shelf. And you can just see the buying that's come in here recently as it broke out of this little resistance on earnings. And it's been choppy, but it's been sort of making upward progress. So that's pretty good. Also in the chip space, I just want to mention, this is ASML, this is more of a turnaround. It's not quite there yet for us. This is just a few weeks off the bottom, but it's kind of a monopoly. And obviously it went through the ringer, had this big shakeout. And then you've seen this really big, look at the volume 2 weeks ago. I think I wrote this up. It was the highest it was like 4 years, I want to say, above the 200-day line, that sort of thing. Not saying I'd be going chasing these things higher. I hope I'm wrong. I hope you should be chasing these, because if these things go up from here, it's a good sign that the environment has really changed. But my guess is, you'll get some pullbacks and consolidations. But so far, really, pullbacks have been limited to a day here and there during the last month. And then just a few more names. We're seeing some of the cookie cutter stuff I've mentioned before. This is Five Below. They do have earnings next week. November 30th. Okay. But you can just see it's kind of just slowly cranking up. I found it interesting that the stock is acting better this week, even though Dollar Tree got hit kind of in its sector. So that's kind of interesting. And then like Planet Fitness, this isn't ready for prime time chart wise. I'm just again mentioning that, you're seeing, kind of a shakeout here. It reacts well to earnings, big move. And so far it's just holding that gain. The more of these things that can thrust and hold the gain, it's only been a few days, but say we come in here, say it's next Friday, the Friday after I'm doing the video, and this thing's still hanging out here, or it came up here but came down here, it's still looking okay. That's just another sort of breadcrumb that you want to follow. And last but not least, I'll just mention this as another potential turnaround. This is sort of PENN Gaming or PENN Entertainment, PENN. Again, this was sort of this and DraftKings, but it obviously got destroyed. Double bottom, but again, you're seeing kind of this, if the daily chart pulls up, you're seeing sort of this sort of double bottom, accelerating uptrend. I don't even know if it reacted well. I guess it didn't react well to earnings, but either way, it's thrust higher. And then you're just getting this to this point. It's only a few days, kind of a grudging pullback in here, relatively tight, well controlled. It's not doing, this and then back up here. That sort of thing. Even like, you look at like on semi, which I mentioned, it looks good, but this is hard to get a handle on. Like, what are you going to do? You got to use a stop down here. It's just hard to get a handle on. It doesn't feel like it's under control, but you're seeing, and I'm not saying PENN is totally under control, but kind of holding that 200-day line, even when the market gets hit, not a lot of selling volume. So I think there's things, I guess the way I would put it as I kind of go back to the overall market is, it continues to seem like we're in this repair phase. I think a lot of stocks, or more stocks, I should say, not a ton, have put in the work and are in position to, make another run to really improve sort of their intermediate to longer term picture. If they can go higher from here, if we come in next week and then NASDAQ's down 5% and, PENN and all these chip stocks just cave in, obviously all bets are off. But I just think, there are more and more things out there that look like they may be changing character. So like I said, we're still defensive. We haven't put any money to work, but I would say you want to have your shopping list ready, because if the market does surprise on the upside going forward, The Fed's easier than expected. The economy's better or weaker than expected, whatever it wants, whatever the market's looking forward to. If the market does do pretty well here, we could have some things to work with. Okay, that's all the time I have for today. Again, have a great holiday weekend, and we'll be back with you next Friday for another Cabot Weekly Review.